Holy smokes. Strap in because what I'm about to show you is going to blow your mind. XRP is moving in a way that is forcing the hand of the Federal Reserve itself. And the latest data shows something massive brewing underneath the surface of the markets. We're talking XRP. We're talking Bitcoin, Ethereum, the entire crypto sector, and how it all ties together with stocks, bonds, liquidity, and the Fed. If you hold any crypto at all, you're going to want to pay attention closely because what's happening right now is not just noise. It's setting up the stage for the next major market wave. This is not financial advice. Now, currently, XRP is trading at $289, up over 2% earlier this morning. Bitcoin is down about 1.72%. Ethereum is down roughly 3%. Yet, interestingly, the S&P 500 is up on the day. Stocks in the green while crypto bleeds. That's a setup you don't see every day, and when it happens, it's a signal. What we're really watching here is the disconnect between traditional markets and digital assets. Usually they move together on liquidity conditions, but right now they're diverging. That means something is shifting below the surface, and if you can read this shift correctly, you can get way ahead of the crowd. By the way, if you're serious about not just riding hype, but actually positioning yourself to spot the next wave of monster plays before they explode, I've put together something that you'll want to check out. It's called the Ultimate Millionaire Investor Guide, Find 100 Times Stocks. Inside, you get access to a full breakdown, documents, visuals, video, and more, giving you the exact formula that the smartest money uses to find those once-in-a-lifetime opportunities. I pinned it for you in the top comment below this video. So, after we dive into this XRP breakdown, make sure you grab it. Trust me, you don't want to miss what's in there. Now back to XRP and the bigger market picture. Let's talk about what the Fed is dealing with right now. We just got fresh U.S. jobless claims data. 237,000 actual versus 230,000 expected. That's higher than estimates, meaning more people filing for unemployment. On its own, that's a signal of softening in the job market. For the Fed, this type of data leans toward cutting rates. Why? Because when the labor market weakens, the Fed worries less about inflation heating up and more about keeping the economy from slowing down too fast. Lower rates mean cheaper borrowing, and when money gets cheaper, risk assets like crypto thrive. But here's the twist. It's not just jobs. Liquidity itself, the lifeblood of the financial system, is drying up. The Fed's reverse repo facility, or RRP, which is basically where institutions park excess cash, has dropped to just $21 billion. To put that in perspective, RRP usage has been down over $2.5 trillion since late 2022 and nearly $440 billion since June of this year alone. That is an avalanche of liquidity exiting. Institutions are pulling cash out of RRP to buy up treasury bills as the U.S. government floods the market with debt. Now you might be thinking, what does that have to do with XRP, Bitcoin, or Ethereum? Everything. Because when excess liquidity dries up, borrowing costs rise and markets get tighter. Stocks feel pressure. Crypto feels pressure. But here's the flip side. A tightening liquidity environment like this forces the Fed's hand. If they don't cut rates soon, the system could lock up. And when they do cut, that's when risk assets catch fire. And make no mistake, XRP is positioned right in the middle of this. It's not just about retail investors flipping coins anymore. Institutions are circling. Public companies already hold over 1 million Bitcoin combined, and there are only 21 million that will ever exist. That's before counting what governments and exchanges hold. Do the math. The float for everyday people shrinks every single year. And XRP is entering that same conversation with its utility and settlement use cases becoming impossible to ignore. Now, one of the biggest headlines hitting this week was Coinbase slashing its XRP stash. Data from XRP Scan shows Coinbase went from holding 780 million XRP down to just 199 million. That's a 69% cut in just a matter of weeks. They used to be the fifth largest holder of XRP. Now they've dropped to 10th place. That is not a small move. It's shaking people. The knee-jerk reaction is, oh no, Coinbase is dumping. That must be bearish. But let's break it down with logic. Why would an exchange slash its XRP holdings like this? There are two likely reasons. One, after the SEC case concluded, a lot of whales who had been keeping assets on Coinbase for either potential sales or collateral started pulling them off. Remember, big whales don't keep long-term holdings sitting on exchanges unless they need them for trading leverage or staking. If whales withdrew, Coinbase's reserves naturally shrink. That's not Coinbase dumping. That's clients moving funds. The second possibility, demand flow shifting. Earlier this year, XRP had monster volume, especially when the court ruling came down. But as price pulled back under $2 recently, demand eased a bit. That reduces exchange balances. Both explanations are normal, and neither screams disaster. In fact, long-term holders view this as noise in the short term. And guess what? XRP has still held strong above 280 in the face of this news. That's resilience. Let's connect this to the broader setup. Right now, the fear and greed index for crypto is sitting in neutral. That's rare. It means the market is perfectly split, half leaning bearish, half leaning bullish. That's exactly the kind of indecision that precedes a breakout move. September historically isn't the kindest month for markets. We've seen rocky action before. But when you get this type of neutral setup with tightening liquidity and the Fed cornered into rate cuts, the spring is being wound tighter and tighter, and the chart action backs it up. XRP, Bitcoin, and even Ethereum have all flashed sell signals on their 1,348 exponential moving average crossovers after running hard in recent months. That doesn't mean the bull is dead. It means they're cooling off after rallies. Bitcoin is down about 11% from its local high. XRP is down roughly 23%. Solana is down about 33% from its local peak. Those numbers might scare weak hands, but veterans know. Pullbacks like these are the prelude to explosive continuation moves when conditions line up and the conditions are lining up. Liquidity is tight, pressure is building, and probability trackers now show over 94% chance of a Fed rate cut coming soon. That's up from 84% just last week. Cuts unlock fresh flows into high-risk assets. Money has to go somewhere, and when it's cheap, it chases upside. That's crypto. That's XRP. That's where the action is heading. So, let's zoom in on XRP's setup specifically, because while Bitcoin always grabs the headlines, XRP's movements lately have been sending signals of their own. After touching that $3 zone and pulling back under $281, it's been consolidating in a range that tells us accumulation is happening. Every time it dips, buyers step in. Every time it tries to run, sellers hit it down. That tug of war doesn't last forever. When you see neutral sentiment, consolidation, and reduced volatility at these levels, it usually ends with an explosive break one way or another. And the wild card is utility. Unlike a lot of tokens that live or die purely on speculation, XRP has something unique. Cross-border payments, settlement infrastructure, real adoption conversations with financial institutions. That's a game changer. When you layer that on top of a macro environment that's about to make money cheaper again, the risk-reward starts to tilt, because once fresh capital flows in, the projects with real use cases always get prioritized. That's why XRP isn't just lumped in with random altcoins. It's a category of its own. Now think about what we just covered with liquidity. The Fed's reverse repo balance cratering, trillions exiting since 2022, hundreds of billions just since June. That's not a small adjustment. That's tectonic plates shifting under the surface. Institutions are reallocating from parking cash into treasuries because the U.S. government is flooding the market with debt. That means the supply of treasuries is exploding, yields are rising, and investors are moving cash to chase those yields. But that can't continue forever because eventually the cost of that debt becomes unsustainable. That's why the Fed doesn't really have a choice anymore. Markets know this. Look at the probabilities. 94.4% odds of a rate cut. That's practically the market screaming at the Fed. We know what you're going to do. The Fed doesn't like to surprise markets. They like to guide expectations and then follow through. So, when you see odds jump from 84% to 94% in a week, that's telling you the train has already left the station. The cut is coming. And when it hits, the injection of momentum will hit every corner of the risk asset spectrum, including crypto. And here's where timing becomes critical. If XRP is consolidating under $3, right, as liquidity turns and the Fed cuts, you've got a catalyst stuck. First, relief across markets. Second, renewed appetite for high beta assets like altcoins. Third, XRP's own fundamentals and institutional flows. That's how big moves ignite. Let's step back and look at Bitcoin's role in this too, because XRP doesn't move in isolation. Bitcoin dominance is still high, meaning Bitcoin sets the tone for the rest of the crypto market. Right now, Bitcoin is hovering just under resistance after its own pullback. Down about 11% from the high, but still comfortably in bullish territory when you zoom out. Every correction in the past year has eventually been a setup for higher levels. That pattern hasn't broken. If Bitcoin stabilizes and flips back up, altcoins follow. XRP has consistently amplified Bitcoin's moves on both sides. So if Bitcoin gets that next leg, XRP will not just keep up, it could outperform. Now let's connect another dot. Institutional adoption. We mentioned public companies now holding over 1 million Bitcoin. That number is jaw-dropping when you remember only 21 million will ever exist. That's nearly 5% of the total supply just in public corporate hands. Governments, ETFs, exchanges, and whales take another huge chunk. What does that leave? A shrinking pie for the masses. And when supply is capped, scarcity drives price. XRP doesn't have the same hard cap structure as Bitcoin, but it does have a locked-in maximum and a clear burn mechanism on transaction fees. Every single transaction permanently reduces supply, no matter how small. Multiply that by years of real usage, and you see the long-term story. Shrinking float, increasing demand. That's the formula. And this is why short-term noise like Coinbase slashing holdings shouldn't scare long-term thinkers. Think of it like this. When you hear that Coinbase went from 780 million XRP down to 199 million, ask yourself why. If customers withdraw funds to private wallets, that's actually bullish. It means more people are holding long-term self-custodying, taking supply off exchanges. Supply off exchanges means less liquidity for dumping. That creates conditions for sharper moves when demand spikes. That's classic market dynamics. Zooming out, the September seasonality is worth revisiting. Historically, September has been one of the weaker months for both stocks and crypto. There are many theories why end of fiscal quarters, tax harvesting, liquidity cycles, global events. But here's the kicker. Some of the strongest rallies have actually followed rocky Septembers. Weakness, then strength, pain, then gain. You shake out weak hands in the chop. Then when the Fed or macro catalysts hit, you launch. That's why you can't just look at one red day or one red week and assume the sky is falling. It's about positioning. And positioning right now is fascinating. On one side, you have cautious sentiment, neutral indexes, and sell signals flashing on EMAs. On the other side, you have fundamentals tightening the coil, liquidity drying up, Fed on the verge of cuts, adoption growing, whales pulling assets off exchanges. That's the recipe for a massive imbalance. Markets move hardest when the crowd is split, because when one side gets proven wrong, they all rush to flip, fueling momentum. Let's go even deeper into XRP's recent price action. After the SEC case clarity, XRP ran hard. No question. That surge took it back above key resistance levels, even above $3 briefly. But rallies like that always cool. Traders who bought early take profit. Latecomers panic sell. What's left is the base of true holders. And we're seeing that base form right now around 280. You can literally map the accumulation zone on the chart. Every time it touches near 270, 280, buying volume spikes. That's not random. That's accumulation behavior. The longer it holds this zone, the stronger the spring gets, because once sellers exhaust, once the chart tightens enough, you get an explosive move. Think of it like compressing a coil. The tighter you push it down, the more violent the release when it breaks. That's what XRP is setting up for right here. Meanwhile, don't sleep on Ethereum either. Down 3% today, yes, but ETH has its own catalyst brewing. Layer 2 scaling, ETF conversations, and ecosystem growth all add up. ETH usually lags Bitcoin in moves, but when it runs, it runs. Why does this matter for XRP? Because money flows across majors. When ETH rallies, confidence spreads across altcoins. When BTC rallies, dominance shifts. When both rally, alt season can ignite. That's the type of macro setup we're sitting in front of. Now, tie this back to liquidity one more time because it cannot be overstated. A Fed rate cut is not just about cheaper loans. It's about sentiment. It's about opening the floodgates. Trillions of dollars sitting in treasuries and money markets suddenly look less attractive. Investors go hunting for yield and upside. Stocks get inflows. But crypto becomes irresistible because the upside dwarfs anything in traditional markets. If you're a fund, a desk, an institution, and you're staring at stagnant treasury returns, while crypto is gearing up for a breakout, where do you allocate? You allocate where the asymmetry is, and XRP sits at the heart of that. So, the pieces are aligning. XRP consolidating under $3. Bitcoin steady above its longer-term supports. Ethereum hanging tough, liquidity tight, but a cut looming. Institutions holding more Bitcoin than ever. Whales moving XRP off exchanges. Fear and greed stuck at neutral. Every single one of those factors alone is interesting. Put them together, you've got a powder cake. And remember, it's not about predicting the exact day or the exact hour the move happens. Markets don't work like that. It's about recognizing the conditions. And the conditions right now are as clear as they've ever been. Pressure, positioning, catalysts, all converging. That's why the next few weeks aren't just another stretch. They're critical because once that catalyst triggers, whether it's the Fed cut or a macro event, the entire landscape can shift in a flash. That's where we are right now. XRP under $3, holding firm. Bitcoin watching key resistance. Ethereum pulling back, but not breaking down. Liquidity in the spotlight, and institutions quietly making moves behind the scenes. It's all happening right under our noses, and most people aren't paying attention. When you step back and look at the bigger picture, the story becomes even more compelling. We're not just talking about one token, one chart, or one exchange moving balances around. We're watching the global financial system shift in real time, and XRP is sitting right in the middle of it. Think about what's actually happening here. The Fed is backed into a corner. Inflation isn't dead, but the economy is showing cracks. Jobless claims creeping higher, credit conditions tightening, liquidity vanishing from the reverse repo facility. All of these are signals that the system is under stress. And historically, the Fed's answer to stress has been the same. Cut rates, open liquidity, make money cheaper. That's the spark for risk assets. Now, overlay that with XRP's unique position. This isn't just another altcoin chasing hype. XRP is tied directly to real-world adoption, banks, payment networks, cross-border settlement. That utility separates it from coins that only rise and fall on speculation, and the market knows it. Every time a new ruling drops, every time institutional flows shift, XRP reacts with outsized volatility. That's because people understand its potential impact isn't just about speculation, but about infrastructure. So, let's connect dots. Coinbase's reserves dropping 69%. Whales pulling tokens off exchanges. Neutral sentiment showing indecision. Bitcoin still holding dominance, but Ethereum, Solana, and others all in correction mode. All of this together is a setup because when the next flood of capital comes in, and it will, the assets with real use cases and strong holder bases will be first in line. XRP checks both boxes. And here's something most people miss. Liquidity events don't just affect prices directly, they shift behavior. For example, when treasuries yield high returns, institutions pile into them because they're safe. But when rates drop, those same treasuries look weak. Where does that capital rotate? Into equities, into growth plays, and yes, into crypto. That shift in behavior is bigger than any single news headline because it changes how billions, even trillions of dollars move. If you've ever wondered why Bitcoin rallies tend to line up with Fed pivots, this is the reason. The flow of money changes direction. And XRP being tied to liquidity itself through its use case is uniquely positioned to benefit from that. It's almost poetic. The asset designed to move money instantly becomes more valuable when money itself becomes easier to move. Let's also talk psychology, because markets are never just numbers on a chart. They're human behavior. Right now, the crowd is split. Fear and greed at neutral tells us half the market is bearish, half bullish. That's tension. And when the crowd is this divided, it only takes one spark to tilt everyone the same direction. That's when you get parabolic moves. Because shorts rush to cover, longs pile in, and sidelined cash FOMOs back into the game. Look back at XRP's past. Every major move, whether the run to 1, then 2, then 3, happened when sentiment was shaky, not euphoric. The big rallies always start in confusion. That's exactly the backdrop we're seeing now. Confusion, indecision, fatigue, which means the stage is set. Let's check levels. XRP has strong support around $2.72 and 80 which has held multiple times. Resistance remains near 320. A clean breakout above that level with volume could trigger momentum toward the mid-threes quickly, and with a Fed catalyst around the corner, that type of move is absolutely on the table. Add in institutional activity and broader crypto flows, and you're looking at a setup where technicals, fundamentals, and macro align. Those are rare. Those are now zooming out to the bigger crypto ecosystem. Bitcoin dominance is the heartbeat of the market. If Bitcoin surges, altcoins often lag at first, but then follow in explosive fashion. Ethereum adds fuel when it joins in. Solana, Avalanche, and other majors push waves further. XRP has shown it can lead at times, especially after major news like the SEC case clarity, but it also rides those broader flows. That means paying attention to Bitcoin is non-negotiable. And right now, Bitcoin holding above key longer-term supports after an 11% pullback is bullish structure, not bearish. The other thing to watch, on-chain data. Whenever whales pull assets from exchanges to private custody, it reduces available supply. That's bullish. It signals long-term conviction. And that's exactly what we've seen with XRP lately. Less supply on exchanges means when demand comes back, the move can be sharper and faster. This isn't theory. It's basic supply and demand. Thin liquidity plus rising demand. Outsized price reaction. Meanwhile, governments and corporations continue stacking Bitcoin. Public companies holding over 1 million BTC isn't just a stat. It's a signal. Adoption is real. Scarcity is tightening. And the same wave of adoption that brought Bitcoin to boardrooms is beginning to touch XRP through its real-world use cases. The dots are connecting faster than most realize. So, let's bring this into focus. We've got XRP consolidating under $3 with clear accumulation, Bitcoin correcting but holding structure, Ethereum down, but with catalysts like L2 scaling and ETF narratives brewing. Liquidity draining from reverse repo pressuring the Fed to cut. Odds of a cut near 95% signaling the market is already pricing it in. Institutions pulling XRP off exchanges, reducing sell pressure, fear and greed in neutral, showing perfect tension for a breakout. Every single one of those factors alone matters. Together, they form one of the most asymmetric setups we've seen in months. That's why attention is so critical right now. Because once the catalyst hits, the opportunity window won't stay open long. And here's where I want to pause for just a second. If you're the type of person who doesn't just want to watch these moves from the sidelines, but actually wants to position ahead of them, I created something for you. It's called the Ultimate Millionaire Investor Guide. Find 100x stocks, and it's pinned in the top comment below. Inside, I lay out the exact framework with documents, visuals, and video, showing how to spot asymmetric setups like this before they explode. It's built to give you clarity in moments exactly like right now. So, make sure you grab it before the next wave hits. And while you're setting yourself up, don't miss the chance to get some free upside today. I've partnered with Robinhood, and right now they're giving out free NVDA stock up to $200 when you deposit just $1 using my link below. NVDA has been one of the hottest names in the market, and this is your chance to own a piece without paying a dime out of pocket. Again, link is in the pinned comment. Deposit $1 and you could walk away with free NVDA stock. Now back to the charts because the story isn't over. In fact, it's just starting. Every data point we've covered points to one conclusion. Pressure is building, and when pressure builds long enough, release is inevitable. XRP is on the edge of that release. The only question is whether you're watching it happen or you're positioned when it does. That's where we are. XRP steady around 2.89, Bitcoin consolidating, Ethereum cooling off, liquidity draining, Fed cuts looming. The table is set, and the next move, it could be the one that defines the rest of this cycle.